Alright, y'all can see my screen. Um, Monday, Sunday we had that gap up, and Monday was no news Monday, and y'all can see the price action. Why I typically avoid, and this is exactly why. So, not gonna go over Monday. Didn't even open my charts that day. All I did was just send a screenshot to the Discord and just show you guys exactly why I don't trade. No direction really, just kind of filled in the gap, and then that led for a continuation of Tuesday to go higher. So previous day highs up here, and unfortunately, like the entire move happened overnight. And what did I trade Tuesday? I don't even think I traded the indices, but we can go over and see kind of what happened. So yeah, this is not ideally what you want to see when you're expecting, or if you want to be targeting this high. I mean, yeah, I guess you could have traded Asia. I don't think a lot of people do that here. So Tuesday, do we have news? Let's see. Tuesday, there was no news. Wait, this is the wrong day. Nope, there was news. CPI. Okay. So, something I just kind of learned was y'all see how 8:30 on the news release, it did nothing really, like nothing significant. And we already hit the most obvious objective. So if 8:30 does nothing, that means that the next driver, which is 9:30, should be the one that you're looking for price to validate your bias or invalidate your bias, right? Because you're not always going to be right. And this is what I mean. I love watching price on the 15-minute. We could obviously continue through this high, through this London high, if we respect these PD rays, etc. But we need our 9:30 candle to confirm what we're looking for. And this is exactly how you know you're not going to get that continuation to the upside. And we probably had SMT up here as well, if I had to guess. Yes. Yep, of course, right? So this is exactly how you know, and see how this was only one-sided delivery the entire time. If 8:30 did nothing, and now our 9:30 driver is doing nothing to confirm that we should be going higher, pairing that with SMT means that at least the new day opening, which is this 18 o'clock, should be the draw. And then of course you could be looking for previous daily low as well. So this is the day that I missed out on a really nice short. And this is something that's like completely textbook to me. 15-minute CSD right after a 9:30 SMT while taking London high or previous day high. This is something that I believe was just like perfect pretty much. And you could expect a little bit of hesitation through midnight, sort of always kind of what happens. But right here, this is where you would want to be out, pretty much all out of your position. Right here at the 18 open, just because we've already had this expansive move to the upside overnight, and now ideally you're not going to have a really clean one-sided New York reversal. It can happen. That's why you can hold runners, right? And I believe this does get hit. Yeah, so it got hit, but obviously not very smooth, right? It came down, touched this low instead of previous daily low, went all the way back up to the new day open, and then went lower. So this was something that I completely missed out on, just because I'm honestly not the greatest at trading in the opposite direction. But now I kind of understanding that 8:30 failed to do what I wanted it to, so 9:30 should be our confirmation, and it invalidated the long setups. Why did it invalidate the long setups? The SMT paired with the change in the state of delivery, and we also broke this low, which would be your break of structure. And if you drop to the lower time frame, this is exactly what the setup that I was actually going to take, but I hesitated. Just this very clean 3-minute continuation entry, right? This is your original 3-minute CSD, which you could have taken here. You would have got filled, and you can use this nice little swing high formation. Closes below. You can go short there. Stop loss at the high, and then you can see that 18 o'clock open offers a almost 3-hour trade. And if you would have held runners, almost a 6-hour trade. So this is something I completely missed out on, but understanding why you missed out on it and then being able to see it next time and then be a part of the move is exactly why you have to go over the price action and see what you did wrong. And these are all different sorts of entries, right? You could have taken the 5-minute CST just on the closure. Ideally, the 15-minute was just as simple as possible. It's a lot less stressful, etc. And then you can drop into a lower time frame to try and get a better risk to reward, right? Say you want to go short right on the closure, and then you can, you don't want to have your stop loss all the way up here because now you only have a 1 to 4, 1 to or a 1.4 R trade. So that was this trade that I missed, and ideally, I don't think price did much after. Yeah, no. It took all day to get down to previous daily low. So you can see why the new day open was that conservative nice target. Because if you would have entered here, you would have been in the trade for 2 hours, and then you would have had your take profit hit. That was Tuesday. Let's go to Wednesday. Off the indices. Start on the daily chart. So this was Tuesday's closure. We go into, oops. So we have this swing high up here. That could be a potential draw. From the daily, I normally primarily like to go the 4 hour. And then let's go into, we need Wednesday. We just did Tuesday. My bad. So this would be your new day open right here. We already took the external high. And this is what the daily chart is looking like. So it's a strong closure like this through a previous important high, right? This is all-time high. All you're doing in a bull market is just expecting continuation higher. But then that's when you need the daily profiles to tell you if you're on side or not. So from the daily, we go to the 4 hour. Here's our new day open. You can see that we have this 4 hour for value gap here. And then we could use this as a potential target to EQ the range just from this swing low to this swing high. This is just the last swing low from the 4 hour for value gap that produced this next leg higher. It's the only reason why I'm just using this short-term range. So here's that same external high where we can just be expecting continuation. And then what we do, we trade New York session, so we're going to be looking for that. So what happened overnight? Just another gap up, or not a gap up, but just another slow grind up. And we're not chasing any of this, right? Did we have news Wednesday? We had no news Wednesday. So your only important time of the day is 9:30. What do you want 9:30 to be doing? You want it to be confirming or invalidating your thought process. And see kind of how this is already setting up to look like the previous day. See how we have 18 or the new day open here again. See how there's not a lot of displacement. And see how 9:30 is starting to break lower. That is kind of what I mean by having smart money's footprints, right? And what do we have again? SMT. Okay, literally again, same exact trade as yesterday, just a little different looking. And the same thing, I missed this one as well, just because I told you guys already that I am not the best at trading counter trend. But how do we confirm that this high should now be protected? SMT at a key time. That's it. How do we trust the SMT? Because not all SMT is created equal. You want the other asset or their stronger asset, so in this case ES, to be starting to displace away. If you don't get this, you most likely should not be putting on risk. That's how I use it at least. And it saved me a bunch. Sometimes you'll miss out, and that's fine. So our conservative targets would be all of these stacked lows. We go to the 4 hour. You can see that we have a 4 hour FEG we can mark out as well. And if we go back to the 15-minute, what do we have again? We have that same sort of thing. Swing formation, 15-minute change in the state of delivery at a key time, confirming that now your long bias is invalidated and we're heading back to discounted levels, which would be the 4-hour for value gap, the new day open, midnight. See how we have stacked lows all beneath this 4-hour for value gap? That's a really good target to have. And then the EQ down here as well. That you could leave for runners. But literally as simple as this 15-minute CSD could be your entry. And you can see we're already at a 3-hour trade. If you would have held all the way for here, you can see that got hit. Very logical level to be taking off a majority of your position in a bull market. 4-hour PD array or higher. You can see 4.3-hour trade. Say you don't catch that initial. This is the setup that I actually was going to take, but I was too afraid to put on risk. Same thing here. Look at ES and NASDAQ. So here's that initial 15-minute CSD. Then we have a candle, up close candle, getting closed below. And if we look at ES, same thing, doing exactly what you want it to be. And then you could be trading this continuation again. Another up close candle with a swing high. Closure below, you could be shorting that, stop at the high. And you could be expecting your draws to be hit. And then you can see, now you have that lower time frame risk with that higher time frame reward. Right? So now you have a 5-hour trade. That's it. Literally, there were some really good setups this week that I just missed out on. Just because I'm not the greatest counter trend trader. 5-minute offered a nice opportunity as well. If you just wanted to just strictly take this up close candle. But ideally you enter right off this 15-minute CSD. That is just the cleanest and the least amount of headache. But literally the same logic as yesterday's trade or Tuesday's trade. Thursday we had PPI. So let's go to the daily chart. Okay. So this is how Wednesday closed. This is sort of how you can expect a continuation lower. See how we take the previous day high? We have a very weak close back into the range. That normally means you're going to get some sort of continuation lower. What do we have? We have previous daily low. EQ is a potential target. And if you go to the 4-hour, you can see a remaining portion of this 4-hour FVG to be filled as well. So that's where my eyes would be. And what do we have above? We have a 4-hour PD array that could be used. So what do we wait for? We wait for the new day open. Here it is. What does price do? Opens higher first. How do you want a bearish candle to form? Open high. Into the PD array that we're expecting price to hold from. And we also get that 4-hour CSD here on that 2 o'clock candle on Wednesday. And so now we're waiting for a New York recession. So to me, and this is one of my friends' wisdom that he helped me with as well. You guys see how this isn't a very strong manipulation into this 4-hour for value gap. I was actually going to short overnight here off this 1-hour CSD. But notice how we're tapping into this 4-hour PD array. Not very strong manipulation, right? You want to see large wicks or large dips below old lows and highs. So you have that large manipulation. That's where people get trapped and confused. This is something that I didn't trust. And you can see what happens, right? Very slow and choppy. And we're not getting that continuation signature really. Where we have no aggression. And also if you look at the stronger assets, none of them have any sort of bearish market structure here as well. So that was another reason why I didn't take this. Pattern trading, you can see what he got fried. And what do we have? We had news when? We had news at 8:30. And this is what I mean. See this Little bit larger manipulation at what? A key time. 8:30. So obviously the only way you would have been able to catch this move is if you just sold above this high, which I don't expect a lot of people to do, and I didn't either. But this is exactly kind of what I was expecting. And if we look at the daily, what do we have now? We have that daily FVG that you could be looking for price to be supported inside of. So once this entire move already occurs and you have the previous daily low already taken, you don't want to be chasing shorts any longer. Yes, the EQ could be reached, but that is a sort of like a runner thing, and you can see it got hit anyways, right? From this low to this high. So all of the logical levels were already met. So going into New York Open, we're not chasing longs, or we're not chasing shorts. And you can see this is also the trade that I missed out on. I actually wasn't home, but this is exactly where I was expecting price to have some sort of support from. And this is sort of like a more advanced entry because it was a 1 minute entry that I've seen play out so many times. And we're consolidating around EQ of the 4-hour range. We're sitting inside of a daily fair value gap. We took out all the important levels that are relevant. And so what am I expecting? I'm expecting higher prices to where? Well, the easiest low-hanging fruit is just EQ of this range, right? And then most importantly, midnight, and you have 8:30 as the data high as well. So if we get rid of this, we get rid of this. Also, a good thing to note, especially in a bull market, if you're below the 8:30 price, which is up here, this is the 8:30 open. You're below 8:30 and midnight, and you're inside of higher time frame key levels. This means a majority of the time that you're in a deep you're in a deep discount. And so what is this red line? That's the discount or the equilibrium of this range. So now you're in two different forms of discounted arrays and ranges, and you're below the 8:30 and the midnight price. So this is the entry that I missed out on. That was a little more advanced. And if we look here, what do we have? Little 1 minute SMT down here as well. So this could be where you're expecting a potential reversal from. And so what do we wait for? Of course, our next key time, 9:30. What do we want it to be doing? Showing that it has willingness to go higher because that's our bias. What does willingness to go higher mean and look like? This right here. I'm not expecting everybody to just long this first fair value gap. I wouldn't. But we can expect price to potentially use this as support, which it does. And this is where you could have entered, right? We get this nice displacement leg up. And in real time, this was very fast. I was watching it on my phone. This is where you could have just entered. Literally just on this candle closure. And your stop loss could be below this candle low here. Again, a little more of an advanced entry. But this is just something that I missed out on just because I wasn't home. But I saw this play out in real time. And my target was going to just be the 8:30 high. And honestly, you could have even jammed your stop loss even tighter just because ideally this just gets left open. But you can use maybe the mean threshold of this entire candle as well just to tighten up your risk a little bit. And you can see price almost comes into this fair value gap, doesn't. And then the 8:30 high is a target, logical area. But if you would have entered, or if you would have moved break even, you would have got break even here. So pretty kind of a poor delivery. And you can see ES not really doing much. I believe YM wasn't either. If you never would have went break even, your targets would have got hit, right? So it just depends on how you manage the trade. If you're just targeting 2R, 2R would have been right here. We would have been out. But this was a little bit of a trickier day, and the higher time frames literally didn't have a setup. So that's, I mean, you could have entered off this 3 minute fair value gap, and your stop loss could have been somewhere closer, but the 1 minute was definitely cleaner. It was all about, and the only reason I kind of didn't even want to go over this one just because it is more of a personal experience trade, not really something that I go over in here a lot. But I want you guys to pay attention to the speed of the candlesticks in real time, especially on the lower time frame, because that will tell you a lot. And the trade that I took on Friday, I'll show you guys why I'm talking about that, and then why I ended up going break even when I did, which ended up saving me from a loss. So it kind of has the same principle as this one. But 2R would have been smacked at the 830 high. And if you never would have went break even, all target profits would have got hit. But that was that day. A little trickier day there. And the next, last on Friday. So Thursday, kind of like a, not necessarily a reversal candle, but just sort of indecisive. So we have to be patient going into Friday. And it was also OPEX. So that was another reason why I kind of didn't even want to trade to begin with. But I wanted to see price. I wanted to give price a chance. So we go into the lower time frame. What do we have? Previous daily low on that 4 hour. And again, EQ still intact. 4 hour not really showing much, right? Kind of just rebalanced this fair value gap. We got the CSD here, but not a lot of real displacement. And we also now have some SMT up here on Wednesday, or with Wednesday's high. So you could have been anticipating a short into this previous daily low, but I really wasn't interested in taking that. So if you go from the hourly to the 4 hour, what do we have? London session, little CSD there, and then a hourly FEG put in. And I don't believe, or there was news at 8:30 and 10 o'clock. So the first trade that I took was actually on YM, which I break even myself because I didn't want to hold the trade through news because I opened it like only a few minutes before news. But that was the best setup, and actually AM Trades took the same thing. But again, 8:30 did nothing. So now you can expect 9:30 to do exactly what we expected it to, which was go lower. Why? Just simply because you're expecting the continuation off of the hourly, changing the state of delivery during London session, delivering from that 4 hour fair value gap with the SMT with Wednesday's high. Again, do not chase shorts. Logical level, previous daily low being hit in a bull market. No reason to be continuing to look for shorts, in my opinion. So what did I do? Dropped into the lower time frame. And this is exactly why you don't look for shorts right away, because you would have got to face ripped, right? If you're just trading off of the lower time frame PD arrays. And this again was sort of where my experience kind of kicked in. And I actually took a 1 minute entry, which I typically don't do a lot anymore. But this is what I was looking at. So y'all can see the SMT with ES. ES was much weaker here. And the only reason why I went break even was because there was no real follow through from ES. So SMT with that 10 a.m. news. After taking out previous daily low, which will make this blue line. What do we have here? Exactly what we want to see. Price fails to break this low from a logical level. SMT now with ES. And then we're getting this nice continuation forward. So ideally my entry would have been here. And my stop loss again at the low of this FEG or at the low of this candle. And then we could be targeting up here or just a 2R trade. Or any of these internal highs, however you guys trade. 1-to-1s, not sure. Doesn't really necessarily matter. But I missed this first entry. And I like the continuous speed here in these next two candles through this bearish PD array. So to me, before all this was even here, I entered a long position just based off of the inversion fair value gap. Right here. I entered at 846 or like 848, I believe. And my stop loss, trusting the speed, trusting my experience, had my stop loss at the low of this fair value gap. Once we have this displacement after 10 a.m. news release, and then the continuation, invalidating a bearish PD rate, I want to see this hold, I want to see this left open, and I want to see speed through this high. So I'm pretty sure I typed to you guys that I said I wanted to see speed through 864, and we finally got a little bit of that right here. Really, I did think we were going to get our take profit hit after I saw this candle, but as soon as I continued to look at ES and it failed to continue this bullish price action, this is where I wanted to see price really hold from the fair value gaps that it was created and the other bearish PD rays that it's inversing. So this is what I was looking at. I had this 1 minute fair value gap marked out, and I understood that this we still had to get through. So this is another speed bump, and when the other indices are still not moving, that's when I want to protect myself. Because if the strongest asset is continuously going higher, but the other two are not, then I'm completely okay with either reducing my risk or going and limiting my risk completely. So now we have three different PD arrays in front of my stop. We could use this as a lower time frame breaker. We have a low, a high, lower low, and then a higher high. We close above here. We have a breaker, an inversion PD array, fair value gap, and then another fair value gap here. And this is the fair value gap that I wanted to stay open. And we have down close candles that continuously get closed above. I want to see all of these things hold price because this ES is failing to continue. So once I saw this here, I pretty much knew that I was going to get stopped out because you don't want to see deep retracements when you're looking for a continuation. And as soon as I saw this candle, knew it was over, got stopped out there. And then price literally just chopped, went lower, and you guys can see would have taken me out for a loss. This is exactly where I trailed my stop. You can see ES literally never even broke this 947 high, and YM pretty much did nothing the entire time either. And this was just solely based off of experience once again, but understanding that the time is confirming or is potentially offering a reversal to these highs. Once again, what are we below? That midnight price, 830, is over here as well. So I was potentially expecting a reversal to these highs. But the only other problem with that was that the SMT was formed with a previous daily high, and then you had that 4-hour fair value gap in between. So that is potentially how you're able to find like a lower high of the week when those things happen. When you have a swing point or a swing high being formed with the SMT, and then you start to get some displacement away from that area with the 4-hour or higher PD array. So that was the entire trade breakdown. We can do YM real quick because this was beautiful, really. This is what I'm kind of bummed that I closed this trade, but I'm kind of happy that I stuck to my rules. This YM was the weakest asset. You guys can see it literally still hasn't even broken all-time high. So logical level met, just a Monday, just a old swing high, right? Go the 4-hour, same sort of things happening. Failing to continue higher, and we now are showing signs of a continuation signature, and then this is how you know that you're most likely going to get this EQ the range. What do I mean by this? Just this really displacement heavy candle here from what, right? We're delivering from this hourly fair value gap. You guys can see the candle bodies are respecting that really nicely. We have midnight price here as well, and you also have that hourly order block or that change in the state of delivery. And we're not expecting price to reverse from this hourly low here. We're expecting price to come all the way back down to the EQ. Why? It's just the weakest asset and is displacing when? Post 930. So that's exactly what you want to see. Dropping into a lower time frame. If you missed this entry, which I did, you could have taken this afterwards. Just maybe potentially shorting this low, etc. But I didn't do that. This is where you could have had a better entry. You could have just shorted the 5-minute CST, the 5-minute fair value gap. Once again, not the best counter trend trader, so I was waiting for the continuation signature here. I went short right here at 950. I didn't want to short right at the low just because I knew price was most likely going to go up a little higher. So I went short at like a quarter of the way up on this candle, and my stop loss was at 213. 55 point stop. I wasn't going to target just EQ because you guys can see that is not a 2R trade. I can potentially expect price to go a little bit lower than this area, and you guys can see it's not anything advantageous. This is a 2R trade, and we had that 10 a.m. news come out. I went short a little bit up here, and you guys can see EQ was hit, and then our 2R was smashed. Literally, it's just as simple as that. Trading the weakest asset, 930 is confirming our bias, and ideally this is the best entry. You just short the 5-minute CSD. You could use the 50% of this candle as your stop loss. So right here. And then target EQ or a little bit below for that 2R. But just the same continuation signature. And one of the dudes that I learned from AM Trades, he actually pyramided on this 5-minute CSD. He was short from up here already, post or pre 930. And then added on this change in the state of delivery, trailed his stop loss most likely to either the candle body or the high, and then just trailed out his position on the way down. But that was the entire week, and I didn't go over the other trades that I lost on like silver. I only lost once on silver, but those were the trades that I missed out on and why I did.